Hello and welcome to Dukascopy TV. As the markets respond to the Greek election results, I'm joined on the phone now by Jean-Jacques Ohana, president and co-founder of Riskelia Paris, to discuss how these events have impacted the currency markets. Jean-Jacques, between New Democracy's win in the Greek elections yesterday and the G20 meeting over the next couple of days, the currency markets have had a lot of information to take on board. How do you think they've responded?
In fact, in the medium term, I would say that the risk-on investments are compromised. Indeed, we are stuck in a low-growth environment, as reflected by weak commodities prices, notably on the oil markets and on the base metals. And on a behavioral point of view, I would say that only a major financial crisis could put pressure on policymakers, the ECB, and the policymakers in the Eurozone. And only a major financial crisis could be a catalyst of political progress in the Eurozone, where fiscal and political integration is needed to overcome all the imbalances that we are going through. Currently, a denial is prevailing, which prevents from taking losses on the surplus of debts, and which prevents also printing euros, the needed euros to make up for the losses. So I would say that the agenda is very heavy, as you mentioned it. We have the G20 today and tomorrow. We have the FOMC on the 20th of June. And then we have the EU summit in Brussels on the 28th and the 29th of June. And I would expect more oscillations, short-term oscillations in the coming days, and then the long-term trend to prevail. I mean, bearish euro. I would expect the euro to go below 120 in the next in the coming weeks.
The euro-US dollar has been the biggest gainer on this Monday following the initial market reaction to the Greek election. How long can this last, though? Some analysts say merely a couple of hours, while others suggest a long-term improvement. Is the G20 meeting likely to inspire fresh volatility?
I would say that on a behavioral point of view, the markets bought the Greek news, the Greek rumor, before it happened. So now they will sell the news, logically. In fact, we have not resolved the Greek issue yet. We have still the same problems, and more importantly, I would say that the risk indicator in the Eurozone are flashing red. For example, the Spanish yield is above 7%. The Italian 10 years yield is again above 6%. So all the risk indicators that Riskelia follows have deteriorated, markedly deteriorated now, and could in fact justify an acceleration, a speed up of the euro-dollar move on the downside. I mean the resumption of the main bearish euro-dollar bearish trend.
The Australian dollar also received a boost from positive market sentiment today, trading higher against its US counterpart. The Aussie dollar is traditionally a very sensitive currency. While the election results this weekend will no doubt have eased concerns, there is still a long way to go. How will the Aussie dollar, US dollar respond to this continued caution?
I think that the Aussie dollar situation is more mitigated than the euro dollar. I would be less bearish on the Aussie, not positive, but because, in fact, there has been a higher past economic performance in the Australian economy. I would sum up that the Australian economy has surprised in the upside. And this could foster an additional Aussie dollar rally in the near term. But in the long run, the Aussie dollar will drift lower due to commodities weakness. I mean, base metals are very weak. Oil markets, which are also connected to the Aussie dollar, are weak, and the iron ore prices, also quoted in China, are also weak, which could weigh on the Aussie dollar parity.
Pessimistic analysts are likely to use the South African rand US dollar as an example of short-term sentiment from this weekend's results. The pair were trading higher overnight, but had already faded by this morning's trading session. Was this response to be expected?
I would say that, well, first of all, the South African rand is highly connected to the euro. The correlation between South African rand against dollar and euro dollar is around 0.7, which is very high. Therefore, I would expect the same story of weakness in the ZAR versus dollar to unfold. Yet, I would recommend to stay aside from the dollar ZAR. As the specific economic news flow has been quite positive in South Africa, and the negative carry of the position exceeds 5%. So I would expect in the medium term the same story of a positive dollar trend to unfold on the dollar ZAR, but I would not recommend an aggressive positioning in this currency. I would rather favor the euro dollar. The short euro-dollar position.
Jean-Jacques Ohana there from Riskelia. We'll be back shortly with more exclusive interviews. For now, though, goodbye.